You're listening to Ask the Expert on Sprott Money News.
Hello and welcome back to this month's Ask the Expert here on Sprott Money News. I'm your host, Jeff Rutherford, and on the line today we have Mr. Fred Hickey. Fred Hickey is the editor of The High-Tech Strategist, a newsletter originally devoted to tech stocks, but has broadened its focus to the idea of money printing by governments around the world leading to no good, and sees gold as a good place to secure one's financial future. His newsletter is one of the most subscribed publications of its kind in alternative investment media. Fred's insight into precious metals investing and tech stocks are widely sought after in the investment world, and he often makes appearances on Bloomberg News and Business News Network. And with that, we'd like to welcome Mr. Fred Hickey. Fred, thank you for joining us today, sir.
Oh, pleasure to be here.
So, Fred, we have a number of questions from our listeners, but firstly, before we actually get into the questions, one of the questions I want to ask you was, what prompted you to make that transition from being more or less a person kind of focused on tech stocks to kind of now shift your focus over to gold and silver and precious metals in general?
Yes, it's an odd thing. Because I was solely tech from 1979 on. You know, I started my first purchases in tech were the old mini computer companies like Wang Labs and Prime Computer don't exist anymore. I went with them, and I had a lot of great years because we had a major bull market in stocks from the 1980s into the 1990s. And as the 1990s got crazy at the end, I started to get concerned. I never owned any gold until 1998, 1999, when I first purchased a few coins and no gold stocks. I'd never owned them. But what I was seeing was a central bank that I thought was doing the wrong thing, always backstopping markets. And that was under Chairman Greenspan at the time. And I saw that it was leading to this, in my area, in technology, the greatest stock market bubble that I'd ever seen. And I warned everyone about it. And I warned everyone about the fiber optics glut that was building. And I warned everyone about the hosting, all the malinvestment that was occurring as the result of the misadventures of Greenspan and the Fed. Well, you start going down that road, you start thinking they're not likely to change, and they're likely to continue that. And ultimately, that bear market that was in gold that had begun from 850 in 1980 and went 20 years, things were likely to change in gold. I saw a tech bubble. I had put options on it. I covered, so I was long. I was long throughout most of the 1990s, and I sold my last tech stock in 1998. I missed the 1999 blow-off, but it was just too dangerous for me at that point. And what I saw was a great mania in tech that was driven by the Fed, and I knew that when that mania broke, that those stocks would be in a long-term secular bear market. So that's what I faced, I thought. I said, I'm going to face a lost decade for stocks, particularly tech stocks. And there was a lost decade for stocks. Mm-hmm. So I said, I can buy tech stocks when they bottomed, and I did. In October of 2002, I had sold all my puts by then and went long tech stocks again, but I believed that it was going to be a tough decade. Yet, I also thought that gold bear market was likely to end as well because they move in opposite directions. If you were to go back into the 1970s gold bull market, the last big one before the most recent one that we had, with every move in stocks, gold would act the opposite way. So stocks went into a big decline in 1974 as gold roared. People started to get excited that they had made some changes. The Fed had succeeded with some of the Arthur Burns easy money policies. The economy was improving. Stocks had a big rally off of 1974 lows, where they had gotten crushed by 50%. And gold went into a two-year bear market in 75, 76. And that knocks gold down by 50%, and gold stocks down by 70%. And then, of course, because things hadn't been really corrected, stock market started to sell off again. Volcker was raising rates. Gold took off after going from 35 to 200 and then 200 to 100 in that mid-70s decline. It then went from 100 to 850. We then popped in gold and bottomed in the stock market at the same time. Right. And so when we got to 2000, after a 20-year bull market in stocks from the 1982 lows, almost 20 years, and a 20-year bear market in gold, I believed that I needed to be in precious metals. And I said in August of 2002, so I never owned any gold stocks up until then. Up until August of 2002, I never owned any gold stocks. I bought my first coins and started consistently buying it through that. In 1999, 2000, 2001, I started buying coins and bars. But I didn't own any stocks. In August of 2002, I wrote, I said, I have to protect I think we're going to be in a big bull market in gold. I have to protect myself from the actions of the Fed. I think they're going to continue to be easy. And in that environment, gold should work, should be the big bull market. And so that's what I told my subscribers. So I made this big move, and I put the majority of my portfolio over the next years into precious metals and dabbled in tech, less so. So I'm really excited because we're here. We're here in June. We're here in late June. We have despondency. The sentiment is awful. The shorts are record levels. We're going into the strong season. Gold may have bottomed, may have set its low in November. We're in this process of higher lows all the time, and it could be over, and yet no one knows it. And no one can bring themselves to buy at the bottom, just like they couldn't bring themselves to buy in 2000 when they should have. When I was buying, right, for the first time. They can't bring themselves because it's just too difficult. It's just the way it is at bottoms, but they should be. This is the time. And that's why I said, I usually don't do interviews, but I said, this is great. And the timing of this week is even better. It's like, this is the moment. I'm really excited. Some of the people I talk to who believe as I do are similarly excited about where we are right now and how these markets are both in stocks topping, in gold, they're bottoming. So that was a very long answer to how I became interested in precious metals. But essentially, it's this: the Fed is out of control, and all central banks, or all major central banks around the world, are out of control. And when you have money printing, when you have debasement, when you have increased money supplies, history will show that the very best place to be is in precious metals, and that's why I went there.
So, Fred, I mean, with all of this madness going on, we're looking at QE to infinity. We're seeing all of these markets now, totally manipulated. And in fact, many would say we're not really dealing with real markets anymore due to this manipulation. One of our listeners wants to know, so when investing in precious metals, do you expect a decent return on your principal, or is it more of a means to preserve your wealth, like insurance, if there is a crisis?
Right. My physical gold positions are wealth protectors. But I also have a lot of positions in the miners. And so when I talked about those June lows, well, the June lows we saw, 15s moves off of, summer rallies, 20%, 15, 20% kind of moves. The miners went up twice or more. So when I talk about gold, physical gold, that's going to protect me. That's where I want to keep my money. But the miners, I'm looking for appreciation. If you want to go back to the 70s market, back coming out of that 1976 low for gold, after gold fell from essentially around 200 to 100, I'm rounding off, the miners had gotten even hurt worse. Coming out, and remember, we had been in a big bull market already. Coming out of that, the largest gold stocks, I went back to them, and I figured out the top 13 names, many of which you wouldn't even recognize now, Campbell mines and things like that. They went up on average 13%. The lowest one, the worst performing one, was Newmont, up 10 times. Okay? 10 times. Some of them went up 20%. If you were in the smaller ones, they went up 20 times. Some of the smaller ones went up 30 times. Now, that's not wealth protection. That's appreciation coming off of a bear market. And so that's what I'm looking for. When I started going into the gold stocks in 2002, that's what I was looking for, was appreciation, and I got it. And it went on for several years where gold stocks outperformed gold. They then turned, and gold stocks underperformed gold. They're levered both ways. And now, gold stocks on a Huey to gold ratio is the lowest I've ever seen, right? Lower than it was even in 2000, at the darkest moment after a 20-year bear market, when Gordon Brown had dumped all his half his gold out in England. We are lower today in gold stocks than we were in 2000 at the bottom of this bear market. there was an interview with the Grant's Interest Rate Observer with Pierre Lassonde, who I think is probably one of the greatest investors in the gold world. And he said in this interview this week, he said, gold stocks currently are at the lowest level he's seen in 30 years. Lower than 2000, right? Lower than the mid-'80s periods that they had, various sell-offs that they had in there. Lower than he's seen in 30 years. So what am I looking for? I'm looking for enormous appreciation in my gold miners. Enormous, right? And I'm looking to protect my wealth with the precious metals.
Another hot topic that I think kind of now bridges the whole idea of gold and technology is the advent of BitGold. So one of our listeners wants to know, what do you think of BitGold as an investment and also as an alternative to the existing banking system?
I never was a believer in Bitcoin because it wasn't really backed by anything. It was electronic currency that was conjured up by someone who we don't even know who it is. I don't have much confidence in that. And there's nothing physical about it. You had nothing that you could hold in your hand or nothing backing it, right? Whereas all money has always been backed over time, right? Well, not always, but through most of history here has been backed or actually transacted in gold or silver or whatever. I wasn't a believer in the Bitcoin. But the BitGold, that was ingenious as far as I was concerned when I saw it. I said, this could be big. This could be big. You could have an electronic currency that you can transact in, right? That would have a lot of the benefits of Bitcoin, potentially, with anonymity and all of that, right? But be backed by gold. So this looked to me, and it's very early now, to be potentially a very interesting development that could, when the crisis occurs, that we can no longer print money, right? Eventually we'll hit that point. And the notion that fiat money works, right, will be completely discredited. At that point, we'll be likely looking for alternatives. So this could be an alternative. And so, the BitGold came out out in the Canadian markets, and a bit difficult to get it for U.S. investors. But it's kind of shot up pretty far. It might be a bit of ahead of itself, but I'm very interested in it.
Excellent. So kind of sticking along the lines of what we're seeing right now as far as upcoming changes within the bullion market, the next question is, what kind of impact will the new allocated bullion exchange have on the price of gold when it comes online later in the year?
I don't know. I don't know. It might take some time for it to get established. These things typically happen that way. But I think that, there's been a lot of movement here. Chinese have been absorbing a huge amount of gold. They absorb all of their production, which is the largest in the world, and then they take in the largest amount of imports. And the demand has been voracious. They weren't able to buy it for many years, for a long time, and then they were able to buy it only not that many years ago. And they've been buying it. And they've been trying to set up their own exchange, Shanghai Exchange here, where they will be an alternative to the London Exchange. And, I know they're determined to do it. I know that it's now with I was reading just yesterday that it's now in the Bank of China's hands to approve or not, and they expect that it will be started at the end of the year. I don't think that's what's going to drive all of this. I think it helps. It helps make it easier for China to get more involved in the markets. I think it helps limit the amount of manipulation that occurs. Because what we've been having here, and I think one of the reasons why we didn't have most bear markets are 2-year bear markets. That's how it goes. Stocks, gold too. It was a 2-year bear market in gold in the mid-'70s. Typically stocks only go down for 2 years, and then they rally. This has been extended longer, and I think it's been extended longer by the amount of this highly levered selling, where it's clearly not economic selling. It's when you come in and you dump, as they did earlier this week on a GDP number that came in as expected. In a millisecond, they came in and dumped $500 million worth of gold, paper gold, right, to try to break a price. And this has been going on for a long time. This has been going on basically since mid-2013. And I think it's extended the bear market. And I think it's also demoralized investors. And I think a lot of investors believe that the market is manipulated and it'll never go up. And that's the kind of thinking you have at bear market bottoms. It can't go up because the manipulators have control. And I don't necessarily believe that. And I think bringing in the Chinese like this, bringing in this new exchange, the Bank of China is now involved in a new London fix, right? the ICBC is going to be one of the other banks that comes in that they're predicting, as well as the China Construction Bank, are going to be involved in this fix. There's more people now involved in the fix. We're not going to get those sell-offs at 10 o'clock what we do in New York. Constantly, right, around the fix. We're not going to get those where all the declines seem to occur when there's more clarity, when there are more people involved. So I think that we will start to take the power away from some of the manipulators and their ability to try to just sort of break prices, break chart points. And on the other side, I do think that we're not going to be through with these. You know, I was a trend trader, and the trend for gold has been down. So they push, and they push until it no longer goes down. And that's what's been happening. That's what I'm saying is we're getting higher lows now. That attack that occurred this week, $500 million worth of gold sold instantaneously, saw gold drop into 1160 or so, drop immediately, and then bounce back immediately. They're not getting the response that they did. But I think what's going to happen is we'll still have these guys with us, these futures traders. It's just the way it is. They're going to switch to the long side when the charts look better. And we will start to see moves up like we've been seeing moves down. But I think it's been extending this bear market. I think that the fact that they've been able to continue to pound it with these enormous levels of future of 30 to 1 times and massive amounts all sold at once has demoralized people and has caused this bear market to be longer than it should have. But I think it's about ready to turn. And I think it's helpful then that the Chinese are now going to be involved, that we'll have a new exchange, that we have a new fix. All of these things will bring confidence back to investors. That when they start to see the market go up, they will start to believe, which they should, that manipulators can't control the market forever. And they won't. And I think they're going to switch to the other side. They're going to go long.
Mm-hmm. So kind of sticking along the lines of China, we know that the weight of the Chinese and the effect that they'll have on the market is going to be very significant, and it's been significant already. But if the IMF includes the yuan in the basket of reserve currencies this fall, what would you specifically buy and sell and why? And likewise, Fred, do you think the inclusion of the yuan has already been factored into the various currencies? I
don't think it's that important. I think it's I think it's important in that the Chinese are trying to establish the yuan as an alternative reserve currency to the dollar, and if we continue to do with the policies that we have, then the strength of the dollar will deteriorate, and people may lose faith in the dollar, and so it gives more credibility if they become part of the SDR, which is likely. It gives more credibility to the yuan being eventually an alternative reserve currency, which is not good for the dollar. If it's not good for the dollar, probably good for gold, right? Probably good for gold. Doesn't change, in my opinion, much of anything, except that it makes the dollar weaker.
So, Fred, now kind of getting back to tech stocks here, we have a question from one of our listeners, and their question is, what do you think of Poet Technologies, which is a PTK on the Toronto Stock Exchange? They have the largest market cap in their technology stocks on the exchange. What are your thoughts on that stock?
Well, first of all, you have to understand, this isn't a technology company that has products. This is a company that has been in stealth mode, okay? So there's very little known about it. We're in an exciting period for tech stocks, and so this one has been benefiting from it. And there's a lot of promises about gallium arsenide and how it's going to change things. But I've heard these stories for 30 years. Honest to God, gallium arsenide is going to change the world for 30 years, okay, from innumerable companies. They haven't changed the world since for this whole period of time. Maybe this will be the one. I have my doubts. And I know there's a lot of excitement right now. I'd be very skittish about this. And there's nobody that is basing any products on this. There's nobody. It's all way early. It's all promises and all hype at this point. Until I get some sense that it's making some inroads into the real world, the world that I inhabit, and it's not yet, right? Until somebody licenses it, right? Or somebody uses the chip, then I've got to be skeptical.
So now, I guess getting back again to metals again, very simple question here. Do you prefer gold or silver as an investment?
Do I have to prefer either one? Can I like both?
Maybe you like both.
I like both. Okay, I like both. But I like gold for storage reasons. It's very difficult for me to store. I'd have to have, enormous amount of boxes to get any kind of significant storage boxes, safety deposit boxes, in order to store the kind of metals that I want to store, right, in silver. I can do it a lot easier in gold. So there's a benefit to having gold. And so I like gold as that storage of wealth, right, protector of wealth. Now, having said that, silver, poor man's gold, usually follows gold and actually will be more volatile, and oftentimes, you get greater moves. And currently, silver on a historical basis, on the gold-silver ratio, is cheap relative to gold. So I like silver, and I think it will probably outperform gold over time as this bull market resumes. So I like both for different reasons.
So kind of going back to technology again. So the question is, what is the most exciting technological advancement that you see over the next 2 decades?
Yeah, it's hard because obviously things change a lot. That's a long period of time to be talking about. However, the technology that I see is one of the ones that was most hyped a couple of years ago and now most hated now, and that's 3D printing. It's going through the typical phase of a developing new technology. People get all excited about the possibilities. They run up the stocks that are, and the early pioneer days, the ones that are getting up with arrows in their backs, most of them, right? They run up those stocks to ridiculous levels, and then the hype phase breaks, and they crash. And that's the process. That's where we are right now. So all of these 3D systems and Stratuses and X1s and all these companies are getting killed. The stocks are the worst stocks in the technology world, and those are the ones I want. Now, the 3D printing, I'm glad you mentioned 10 to 20 years, because it probably take 10 years for this technology to be real. I mean, it's real in that they can develop prototypes, they can use it to build certain expensive items, but eventually they will get the cost down so that it will have an impact on our manufacturing processes. And it will be a huge productivity enhancer. We have no productivity these days, right? Everyone's complaining about the lack of productivity. This is the kind of game-changing technology that could give us a huge burst in productivity of U.S. Canadian manufacturers. And so I'm very excited about it. It's hard to get too excited when the stocks are still in free fall period, and that we're so tipped up in the stock market. With the QE not being here anymore and stocks rolling over, I don't really want to be buying too much. But coming out of that, I'd be looking to buy maybe a Stratus, which is the best of the group, coming out of a decline, a bear market, or at least a correction. I might be interested in buying that for the long term, right? But likely the leaders in this 3D technology, I'm a believer in it, and I think it might be the most exciting technology we have. The leaders, we don't know the names of today. That's just the way it is in technology.
Well, Fred, we'd really like to thank you for joining us here today on Ask the Expert. It's been a pleasure speaking to you. And likewise, we'd like to urge our listeners to subscribe to Fred Hickey's High-Tech Strategist newsletter for you to hear more about the things that Fred has to say. And again, Fred, we'd like to thank you for joining us here today on Ask the Expert.
That's been a pleasure. Nice talking to you.
And to our listeners, thank you for listening. This is Jeff Rutherford for Ask the Expert here on Sprott Money News. Have a great day.